olá a todos, tudo bem? Para essa sessão aqui da Expert, para saber um pouquinho mais da visão, uma visão estrangeira do Brasil, né? A gente trouxe um convidado muito especial, então eu vou mudar aqui de língua aí para quem quiser pode acompanhar aí as nossas legendas. So I'm here with Ferreira, our head of research and strategy, and our guest is Rob Wood. He's the principal economist for Brazil and Latin America at the Economist Intelligence Unit. Hi, Rob. Welcome, and thank you so much for joining us.
Hi, Rachel. Thanks a lot for the invitation. It's a pleasure to be with everybody.
So, Rob, I think that the first question I could ask you. So I think I'll include that. So ask you to give us an overview of what is your view for Brazil at the moment? So I'm sure that you fit this within the view of the EYU for the whole world, but also for Brazil and Latin America specifically. And also, so giving the focus of this discussion, what is not only your view, but what is your client's view? What is everyone looking at the moment when they talk about Brazil?
Sure. So, clearly the focus right now is on the coronavirus pandemic, how the federal government is managing it, how the subnational governments are managing it, and what the impact is on the economy. We have quite a lot of data which starts to give us a picture of this very sharp contraction in March and April, and then a gradual recovery beginning in May, June. The focus then is, the extent to which we're going to see a firm recovery or not in the economy. But then, beyond that, the pandemic's still got a long way to go, not just in Brazil, but, across the globe in developed markets and emerging markets, although, China seems to have got it more under control than other countries. So the focus is still going to be for the next few months, can the federal government and the subnational governments that are taking more of an active stance, can they manage the pandemic in a way that will allow business activity to return? So a lot of focus, I think, is going to be around the capacity in the healthcare system. If we see in different cities the capacity of the special beds and intensive care unit beds, if we see that capacity getting very limited, then mayors, governors will be under pressure to dial down reopening of business activity. And that's really going to be the focus of the next 2 to 3 months. Then, the questions will be around, okay, how will Brazil get back on its feet? And what is the medium term and the longer term future? So I think investors right now are on the sidelines. Depends which sort of investors you're looking at, whether it's financial investors or actual companies looking to invest in Brazil. I think those are physical investments, business will be on the sidelines waiting to see how things evolve. Obviously, a lot of the people working in the C-level in these companies will also be looking at activities in their larger economies, in their host economies. So they've got their own things to worry about at home, as well as looking at other sort of big markets such as Brazil.
Rob, the magazine is pretty opinionated, right? Always puts out great articles about the region, about Brazil more specifically. But you work on the intelligence unit, right? Can you explain to our audience what's the difference between the magazine's work and the work that the intelligence unit do?
Absolutely, yeah. So as everybody knows, The Economist It was founded 1843. The Economist Intelligence Unit, we're a sister company, sort of a research consultancy within the Economist Group. So we were founded 70 years ago, and essentially we're more business to business. So whereas the magazine, if you like, is business to consumer, so that's providing their view and essentially sort of saying how things should be done, it's very influential, obviously. C-level executives read it, students aspiring to work in business as well, global leaders. It's obviously a leading media outlet. But at the intelligence unit, we're more business to business, and we're sort of focusing in on what's happening. Why is it important for our clients, which are businesses and investors, also governments and universities looking at these countries? We sort of say, what's important, what's going on, what's going to happen, why, what the risks are. So we sort of provide consulting in this area, both in politics, also in economics, and also across different industry groups.
Great. And would you mind sharing with us, just for us to start our conversations, I mean, your key forecasts for Brazil, right? When we think about, GDP growth and, interest rates, things like that.
Yeah, absolutely. Yeah, so very promptly after the pandemic hit the Western hemisphere, we, as a company, we revised down pretty sharply our forecasts for both developed markets as well as emerging markets. And we revised Brazil down to a contraction of 5.5% in 2020. And at the time, this was in early April, this was when, people were just beginning to wake up to how serious the stop in economic activity was going to be with the lockdown. We were sort of quite ahead of the curve at that stage, and then a lot of other forecasters were catching up. We've recently revised down our forecast to a slightly deeper contraction. So now we're saying a contraction of 7.5%. And that's not as far as the World Bank, or saying contraction of 8%, or the IMF 9%. There's some other forecasters as well going, seeing a deeper contraction than that. I mean, clearly, there's a lot of uncertainty, and we're seeing that also in the data. So, for example, the data in May, if we look at industrial production and retail sales, you do see quite a beginning of a pickup in that data from IBGE. But then when you see the data published by the central bank, the monthly economic indicator, we only saw a 1.3% expansion in May, month on month, after two sharp falls. You start to see some sort of, the difficulties in looking at the data. And of course, there are difficulties for statistics agencies across the globe collecting the data. But right now, it's clear there's going to be a deep contraction this year. Our forecasts are of a deeper contraction than the consensus, which is just revised down to 6.1%. Central bank, 6.4% contraction, and the government, I think, has a forecast that it's working with of under 5%.
It's 4.7. Yeah, just released yesterday.
In all cases, this is a sharp contraction. Although it's good to put Brazil in the regional perspective. So we see Brazil's contraction this year similar to contractions in Colombia and Chile. But in Mexico and Argentina, we see an even deeper contraction. Argentina has its own crisis, and this is, hammering it even harder. And Mexico, with its ties to the US, and a government that hasn't been pursuing very open, business-friendly policies, and very little fiscal stimulus as well. Monetary policy is still quite tight, although it's being eased in Mexico. So we see more of a hit in Mexico and Argentina than in Brazil.
Raquel?
Great, thank you. Yeah, it's actually really interesting to see the perspective when compared to Latin American countries, because when we talk about all of these numbers and projections, as you say, it's really hard. And we've been seeing here in Brazil, some of the big banks and analysts, they have been revising up and down their forecasts as well. So just today, we've seen a big bank in Brazil as well just change their projection from 7.5 to 5.5, and before that was the other way around a couple of months ago. And I think that, of course, all of these numbers are very important, and me as an economist here, at XP Investimentos, we look at this in very much detail. But I think that this year, the contraction is going to be so big, and it's going to be worldwide. So all countries are going to contract, all countries are going to suffer a lot from this crisis. So I think from your perspective, as you say, and I think for us, this is really interesting because it's even more interesting, at least from my perspective, the fact that the EIU works with businesses, because this is in the end who is thinking about either coming here, not coming here, or living here, or investing here. And this is all we hear about. And you know how Brazilians are. I guess all over the world, but Brazilians have that special, if the foreigners, they don't see Brazil with a good eyes, if they're leaving, as we've been seeing in the stock market, everybody gets very worried. So I think that from that point of view, so beyond the numbers, beyond the exact number of contraction, so do you think that this is scaring investments or scaring people, like businesses who are already here? Are they leaving? Because I think that if we look at the external accounts, if we actually look at the number, what we're seeing is that FDI, the investments, the productive investments, they are kind of stable somewhat, although they're losing lots of money here, the multinationals. The stock market is losing a lot of investors. So what's your view on this?
Sure. And sort of, thinking about direct investors, companies physically investing in Brazil. The first point is profits this year are going to take a massive hit. Now, FDI, historically, a big component of FDI are reinvested earnings. So these are the profits from companies. They are reinvested, increasing capacity. So, car companies that are already in Brazil, that have been here for a long time, we've made X amount of profits, we're going to reinvest to have a new product line or whatever. As those profits are hit this year, then there's less scope for reinvested earnings. So that's one channel, I think. And then there's also the companies are looking at, well, what is demand? What is the demand in my particular sector? So obviously in the short term, a lot of sectors have been hit really hard. And investment decisions are on ice. There's also the sort of disruption to decision-making, finance lines, although central banks across the globe have been very active, including the Central Bank of Brazil, to ensure financial systems work okay. But there is that very sort of, the short-term shock hitting foreign direct investment. And we saw that in the data in April. There's very little FDI inflows, and in March also, very low. First quarter, I think, Brazil had around 20 billion. So, it's around a quarter of what Brazil normally gets every year. I think this year we will see quite a hit to FDI in Brazil and, emerging markets across the board, developed markets as well, as companies sort of reassess, look at their balance sheets, because, there are going to be issues there as their profits are hit. And then they'll start looking at, okay, well, where do we want to invest more as we go into the next stage of sort of living with COVID before there is the vaccine, and then hopefully when there is the vaccine and it is deployed, and social distancing measures can be totally dialed down, then you can have some sort of resumption of normal business activity. So right now, I think investment decisions are sort of frozen. If you look at the stock market, so you look at Brazil's stock market and compare with other markets. If you're looking at the stock market here in the US, you see this sort of V-shaped rebound, really sort of pricing in a recovery of the economy in 2021. You haven't seen that so much in Brazil. And, that speaks to some concerns about, well, what is going to be the strength of the recovery in Brazil later this year and into 2021. One of the financial instruments that I look at is the exchange traded fund for the biggest Brazilian companies. And while you've had this sort of V-shaped recovery in the S&P 500, you haven't seen that in this exchange traded fund. So some companies are doing much better, like Vale, which is more linked to copper prices and demand for, iron ore prices and demand for minerals in China, which is recovering. We saw the second quarter GDP number, which is slightly above expectations. So yeah, quite a mixed bag. Companies that are exporting in Brazil will be materials will be in a better position at the outset, and then investors will be looking at, okay, well, which companies will do better than others, which sectors will do better than others during the recovery phase.
Rob, Brazil was one of the most impacted countries, right, on this pandemic. I mean, we've had a pretty prolonged quarantine, right? We entered this year already with a pretty high debt to GDP ratio. We're running a very large budget deficit, right, in order to stem the impacts of the pandemic. So we're going to come out with the GDP decline, as you said, right, in around 6 or 7%, a budget deficit in excess of 12% of GDP, and then the debt to GDP ratio also going close to 100%, right, which is pretty high when you compare with any other emerging market. But then if you look at from another perspective, right, and you compare with previous crises, I mean, this is the first time that Brazil is facing a global crisis, and we can actually cut rates, right, into a crisis. We don't have to hike interest rates to 30-40%, right, like in the past. Our country risk, right, measured by the CDS, has gone up, but it's still around 300-400 basis points, and it's not on the thousands, right, as it used to be the case in the past. And the country still has, over $300 billion of international reserves, right? So how do you reconcile, right, those two things? One scenario which looks pretty grim, right, pretty difficult, and another one that doesn't look that bad, right? How do you think about the future, right, for Brazil within the global context, of course?
Of course, and if I may add to Fernando's point, I think it's just a matter of also a comparatively how do you see that compared to other emerging markets and also to Brazil in the past? Because I think many investors and many businesses, they tend to compare Brazil to Brazil 20 years ago or Brazil to other emerging markets. So just to add on that, thank you. Sure.
I guess, first of all, what we tend to do is look at, okay, was this a sort of a Brazil-induced crisis? Were there imbalances growing that suddenly, culminated in a crisis, and then the country has to pick itself up off the floor, and it was all of its own doing? Whereas this is it's clearly an international crisis. Everybody's in the same boat, and that's important. Also because I think investors across the board are giving emerging markets more sort of breathing space in terms of, okay, we know there's going to be a big fiscal hit this year, but we are also seeing that central banks are able to reduce interest rates, and that's contributing to lower debt interest payments, which was particularly been a problem for Brazil in the past. So 5-6% of GDP typically as the cost of servicing debt. So yeah, I think international investors are, giving emerging markets some leeway. There's also, there are also opportunities for some of the sort of weaker credits in the region, some of the Central American countries, some of the countries in South America, to issue bonds to plug the fiscal shortfall that there is, with the need for sort of COVID spending and the revenue shortfall because of the recession. Just the other day, we had El Salvador, which is a weak credit, issuing in the bond markets 9.5% coupon, which is high. Brazil also issued within the last month, although Brazil tends to issue more for benchmarking purposes for companies. But to your point, Fernando, looking at sort of the strengths of Brazil, the policy strengths and the structural strengths, and putting in this economic contraction and the hit to the public finances that there is already, and it's only going to get worse, in the next few months. So yeah, I would say, to Brazil's credit, and to the work of policymakers at the central bank, and really sort of a change in the government's change in views of the government with the entry into power of Michel Temer. So we have a more sort of serious approach to inflation control that was not there after the last global financial crisis, when, as we know, fiscal policy was too expansionary. They didn't dial down expansion in time. Interest rates eventually had to go way up because inflation started running out of control. So, in the past, I'd say 4 years, policymakers have done a good job getting inflation down, and also providing a better environment for a reduction in the Selic policy rate. And before COVID, we were already Brazil was already sort of historically low Selic rate of around 4.25%, I think, at the beginning of this year, as the central bank was in a position to move forward with expansionary monetary policy to try to support the economy. Because, as we know, although the policy framework improved under Temer and in the first year under the Bolsonaro, the pickup from the huge recession, and Brazil was only just beginning to get back on its feet after the 2015-2016 recession when this hit. Growth was still pretty anemic, but there was still room for the central bank to lower interest rates. There was confidence in the policy framework. Also, fortunately for Brazil, they did the pension reform last year. Now, if Brazil had not done the pension reform last year and it was floating around this year in Congress, I think that could have been much more serious for Brazil. There would have been less leeway right now.
It definitely wouldn't be where we are.
Right. So, you'd see a higher risk premium. I mean, a lot of the savings that were envisaged over the next decade is basically equivalent to what the government is spending on a temporary basis. And it's important that it is temporary spending on income support for the poor, which is the right thing. So I think if you look at inflation, there are deflationary forces in the economy, so that's less of an issue. There's still room, I think, for further cuts, not too much more. I think, the central bank has gone a little more sort of data dependent. And, when we saw the data for May for IP and retail sales, and some forecasts started to revise their growth numbers down, that might have led the central bank to just stand off a little bit. When it looks at its own, when we see the other indicator, the monthly economic indicator in May, which is pretty weak, then that gives some room for perhaps a final 25 basis points cut at the next meeting. But we're pretty much towards the end of the easing cycle. On the fiscal side, so I think there's still going to be some stimulus. In fact, some of the second quarter indicators do speak to the amount of fiscal stimulus, particularly retail sales through the Corona voucher. So, that has supported private consumption. Now, there are 2 more payments of 600 reais spread over the next 10 or so weeks. The issue then is, okay, well, when that runs out, what's going to happen to consumption? So I think that's something that investors are going to be looking at. Will the government, there's limited room for further fiscal stimulus, I think, before you start to sort of see public debt going even higher, risking going over 100% in the short term. So the room for further fiscal stimulus starts to ebb, but then you start to come into the politics. Clearly, this is popular with low-income voters, and it's clear that the president is starting to see this constituency, which typically was the domain of the Partido de los Trabajadores. I think Bolsonaro is starting to go after some of this electorate in the northeast, and the Corona voucher clearly, while it lasts, is giving him some support in his popularity. At the same time that he's losing popularity from some of the sort of more middle class voters that decided to vote for Bolsonaro at the last elections rather than have a return to the PT. So I think there's start to be some political issues coming in here, clouding the horizon. And it's something we haven't sort of mentioned so far. The politics. I think investors do look at Brazil. I think foreign investors, they like to invest in a country where there's political stability, social stability, and predictable rules of the game. Hopefully, also reforms to increase the size of the market through greater growth, reforms to make the business environment more attractive, opening up of sectors. And there are some positives in those areas. The finance minister has been trying to move ahead with privatizations. There's also the infrastructure concessions program, which has obviously been set back by coronavirus, but is seen as key to the restart of the economy. So there are some positives there, but investors do I think in the last year or so start to see concerns building around where public policies are going under the Bolsonaro government. I think you saw that last year with the forest fires in the Amazon and questions around environmental policies. These are very sensitive issues for foreign investors, particularly in Western countries. Not so much, it seems, with the current U.S. administration of Donald Trump. But our forecast here at the EAU is that at this point in time, Joe Biden is in a pretty strong position, and our sort of central forecast is that he will win the November election. So I think we could sort of see some changes in international relations there, which will sort of feed into all of this. But investors, as I say, they do look at the political environment. I mean, I think they have thick skins. They operate in a lot of difficult business environments and in emerging markets where the politics aren't, quite as stable. There was, however, sort of a hope when Michel Temer came to office that we'd see sort of more of a consensus around economic policies and more market-oriented policies. And we did see that. We saw the landmark public spending cap. So investors were saying, okay, yeah, Brazil's getting its fiscal house back in order. And then, we had the governability issues under Temer, which precluded further reforms, including the pension reform, and that was left till the first year of the Bolsonaro government. I think a lot of investors, were focusing on what are the economic policy reforms that the Bolsonaro government is going to move ahead with, and they quite liked what they saw. But then as political difficulties, tensions between the executive and Congress started to emerge last year, it started to become clearer that it was going to be difficult to move ahead too quickly with the other reforms that were well received, and they're still out there. So, reforms needed to lower the famous custo Brasil, such as tax simplification. The benefits of these reforms tend to accrue over the longer term. They're not sort of overnight growth changes, but they were nevertheless important. And I think investors were cautiously optimistic that there was going to be enough momentum to get these reforms through this year before you have the third year in the Brazilian electoral cycle, which is not a great one for sort of radical reforms. But even before COVID, you started to see political tensions coming to the fore and sort of a loss of momentum on the reform agenda. So after pension reform, the idea was to move ahead with tax simplification, but the government hasn't yet presented its proposal. And it's something that legislators have been working on for years, and there are different proposals out there. The issue was to try to get everybody on the same page and push it forward. So I think investors have become a bit less optimistic about that reform process. There were the other reform proposals that Guedes came out with that were well received around making budget management more flexible, so trying to reduce the high level of non-discretionary spending, trying to reduce the fundos, trying to sort of strengthen the public finances, and then the administrative reform, which seems to have been put on the back burner for quite a while. And these reforms start to now come up against the local election cycle, so that's problematic to make much progress. But there's still the sort of the hope that something will materialize in 2021. In terms of the politics, so in recent weeks we have seen a bit of a cooling of tensions, and it does seem as though the president has taken, at least at this point in time, a more conciliatory approach. But we've seen the sort of confrontational politics that he was engaged in earlier in the year, and there's quite a risk that will return, particularly in the run-up to the elections, particularly as his position is vulnerable to weakening if the economy doesn't pick up that strongly, for example. So I think foreign investors are looking closely at the stability of the political environment, effectiveness in the political environment, the extent to which these reforms will go ahead or not during this term, or whether they are put off till next administration. And just these tensions between the executive, legislature, the judiciary branch, and now you have a new component in Brazilian politics, in recent Brazilian politics, which is sort of the role of retired generals in the government and also of the armed forces more generally. So yeah, I would say so the coronavirus crisis has sort of exacerbated some of these tensions, and the challenge will now be, okay, how will Brazil come out of this, and what will a third year and then an election year in 2022 look like for the economy?
Oh, perfect. Thank you. I think you touched on a few points that we're going to ask, which is, the main risks and the main expectations, which I think, touches exactly on fiscal, and the main risk being the fiscal one allied to the political one, because as I keep saying here to clients, is that I see somewhat the fiscal risk and the political risk as kind of one, because of course the government can have a lot of plans in order to improve the fiscal situation and actually keep the spending, the increase in spending for this year. So keeping everything temporary. So we see this from the Treasury Ministry. We see this from all of the teams within the Ministry of Economy. Basically, whenever they have an opportunity, they bring this up, that the spending is going to be temporary. But of course, they don't decide that alone for themselves. So they need political leverage to make sure that this don't fall differently in Congress. So I think, I mean, so in terms of reforms, a question that I have is basically, there are things that the government, and I think that the Temer administration was actually good at doing this in terms of implementing some reforms that were more microeconomic reforms, and some of them didn't need necessarily Congress support, and they focus a lot on improving the business environment and, for example, on foreign trade. And so it's kind of like the little by little reforms, but they make a lot of difference in certain sectors. And I see that a big part of the team within the Ministry of Economy, especially, for example, in the political, in the Secretary for Economic Policy, that they do a lot of these, you know, people are starting to mock them, saying that they are think tank now. But I think some of these, they're thinking that they can implement as, you know, regulatory changes and or even legislative changes, but that don't need that much support. So they're not like constitutional amendments. So yesterday we had, similarly, we had yesterday Rodrigo Maia, the president of the lower house here at Expert, and he mentioned a few of those microeconomic reform in addition to the tax reform, which I think, as you said, it's quite complex. They'll keep discussing. I mean, he had a positive view about this, but of course he wants he wants this to pass this year so he can have his name on it. But I guess he mentioned a few of those. For example, marcos regulatórios, so the regulatory background of for oil and gas. So changing the rules for that. So I guess it would be making that environment more friendly for investors, as we've seen in the last auction for, say, São Rosa, which was completely a failure. But as I've heard, a lot of investors said it's because, I mean, the system is also weird. We don't understand, it doesn't work. So do you think that this type of reforms would also lighten up the mood in relation to Brazil? Or do you think that if the government doesn't manage to do the big reforms, nothing is going to change the view that investors in general see towards Brazil?
Sure. No, you're absolutely right. You know, there have been some sort of small, you know, there's always sort of piecemeal, in the last few years, there have been sort of piecemeal macroeconomic reforms. The margins sort of help in particular sectors, and, you know, policymakers are open to sort of learning and improving things. But, you know, there always seems to be, you know, more needing to be done. So, for example, folks, you know, Brazil has this very ambitious infrastructure concessions program, and yet again, you know, sort of sectoral specialists are saying, okay, well, you know, the rules are still not that great. You have to make them more attractive for foreign investors to participate. So, you know, it is an iterative process getting there. I think within the economy ministry, there is a sort of desire to get there. And yes, you know, it's not all about sort of the macro reforms. And, you know, a lot of the privatizations. So, you know, there was an important ruling by the Supreme Court which allowed some assets of parent companies to be privatized without having to have a vote through Congress. So these are sorts of things I think, you know, you're talking about. So legislative changes which enable greater private participation and greater foreign private participation. Whereas the big, you know, sort of a full-on privatization of like the Postal Service, Correios or Eletrobras, what's left to be privatized, that would, where it's privatizing the parent company, that does require sort of vote in Congress, which is, you know, much harder to broker, you know, than, you know, the smaller reforms. Yeah, I think, you know, Brazil has been going ahead with sort of smaller reforms over the years, and that, you know, that does help at the margin. You know, one point I did want to mention though is, you know, there hasn't really been a strong drive by the president on the reform program, and it's, you know, it's sort of been left to the finance minister, who whose relations with Congress haven't always been smooth. And, I think that's an issue when you're trying to enact your economic reforms. You want the government to be on the same page and pushing forward with a particular policy and having good negotiations with Congress to move ahead. We haven't really seen that. I mean, the pension reform was already in the works before the Bolsonaro government came to power. And if you like, sort of the government was sort of a part player, sort of watching from the sidelines to a certain extent as Congress, led by Rodrigo Maia, sort of pushed ahead with this process. So, there are issues there. Yes, there are good ideas. Some of them can be done without too much political give and take in Congress, which has always been an issue in Brazil. But the one thing that it hasn't been sort of a strong drive by the administration from the president himself. And also, the articulation with Congress has at times been quite weak. So that sort of slowed progress as well.
And Rob, you mentioned on your earlier remarks that foreign investors were kind of on the sidelines, right? Sort of a wait and see approach with Brazil. But you also talked a lot about the reforms and the need for additional reforms. Do you think if Brazil re-engages again, right, on a reform agenda in the second half of the year, will that be enough for foreign investors to have a different perspective and to start to come back to Brazil?
Sure. Yeah, I think that's going to help. I mean, I think you will see, FDI picking up later this year, but it's probably going to be about 40% lower than it was in 2019. Yeah, sure, that's going to help. But I think foreign investors will be looking for sort of some of the other ducks to align. So they'll be looking at the political environment, social stability, sort of questioning where is the polarization that existed before the Bolsonaro government came to power. We saw it in the last few years of the PT power, the PT administration. Can the country sort of overcome its sort of social and political wounds and come together? And if not, it's difficult to for foreign investors to see a more constructive political environment, which they would sort of be looking for in terms of, okay, you have consensus around these policies, it's going to move forward more quickly. Instead, what you have is sort of reforms coming in waves, and then different governments coming into power and slowing down or focusing on different things. So when investors look at countries that are able to sort of build consensus around economic policies and sort of growth enhancing reforms, places like Chile, there's sort of there was always sort of a long-term vision there around where the country was going. It's had its difficulties. It's having to sort of reprogram its development path. We saw the sort of social tensions eventually emerging as a lot of the electorate felt that they were missing out from the benefits of growth. But I think investors do want to see greater a reduction in sort of polarization that grew up in the last few years of the PT and then has been sustained during this administration. And some of those issues there are longer term issues. I mean, it's difficult to get broader consensus around where the country's going if you do have these huge income and wealth inequalities. So something that has come to the fore during the crisis is the lot of poor people in Brazil. There's a lot of talk around universal basic income. I don't think that's going to go anywhere. But there is a broader conversation around trying to improve the lot of the poor, and you really need that to sort of get a country on on the same path and sort of working in consensus.
Perfect. Thank you, Rob. So I think moving to something that you mentioned a bit earlier, so the environmental agenda. So we've seen a couple of weeks ago the letter from a lot of international investors saying that, I wouldn't say it was a threat, but it was almost like one. So kind of like raising the attention for this issue in Brazil. So what do you see on this, on the whole ESG agenda and the role that the environment is playing in the investment side?
Yeah, and if you like, that sort of follows on from your previous point around what needs to be done to get foreign investors back into to Brazil. I think the investment world is looking much more around ESG issues, so environmental, social, and governance issues in companies and in countries. And I think the government at the highest level has perhaps thought, well, it doesn't really matter if we don't engage. And the president himself sort of has a sort of quite a narrow sort of inward-looking focus, if you like, speaking to his support groups and not fully realizing the implications of loosening environmental policies around stewardship of the Amazon forest. And we're starting to, so the first warning signs were last year with the queimadas, the forest fires in August. And the images went all around the world, and that's where governments, particularly Western governments in Europe, started to look at the environmental policies of the current government. I mean, it's long been an issue for Western governments, Brazil's stewardship of the Amazon. But what you've seen is this perception by Western governments and companies that environmental policies have loosened. And it's not just sort of the leaders of it's not just the CEOs of these investment funds that may or may not have a sort of a personal view on the Amazon. They have to be aware of the investors in those funds. So that's essentially it's institutions and ordinary people. And there's growing pressure in the Western Hemisphere, also Japan, for investment to be more environmentally sustainable. So I think this is a key thing for the government to address. And I think it's going to be a struggle to address this year before the next round of queimadas. Now we've already seen an increase in deforestation. Looking at the data, first few months of this year, so up from 2019. So typically you have deforestation, and then that sort of leading to further forest fires, probable when the season kicks off. So you could start to see this issue coming right back. But you've already seen not just foreign fund managers and companies, but also European governments, but also now the Brazilian companies that are concerned about this. And there had already been efforts by Brazilian companies that are exposed, making sure that the right things need to be done. So I think there's going to be a lot of emphasis on this, and so far what we've seen is the president appointing Amatan Mourão to get the army involved in improving the environmental controls. But I think Western governments and companies, fund managers, they're going to want to see sort of results. And a lot of this these days, it's it's easy to monitor through the data. So you have satellite images as well as the TV pictures of fires, if that's what happens again this year. So it's going to be difficult for the government to wriggle out of this one. I think it's sort of too late for this year in terms of we're probably going to see another round of forest fires sort of setting off media alarm bells. and putting Brazil back in the focus on this issue. But the pressure has already started to come to the fore, and will mount further if there isn't a more substantive and serious attempt to revert this reversal of environmental controls that we saw since this current government came to power. So yeah, it's definitely a key issue for foreign investors.
Rob, thanks for that explanation. One common or one big discussion we have in Brazil is that we've never had such a low level of interest rates. So a lot of people believe this is going to be transformational for Brazil because it's going to bring a lot of investments and especially on the real economy. So I understand that for the local money, right? But from a foreign investment perspective, I mean, the whole world has pretty low interest rates at the moment, right? And you have over $13 trillion of negative yielding debt in the world, and still we haven't seen growth picking up. So what's your view on that? Do you think just by lowering interest rates would that be enough to reignite the economy, or what else is needed, in addition to low rates?
Well, I mean, first of all, I would sort of say that with the low interest rates, you see sort of the dialing out of the carry trade, which was strengthening the real, to these crazy levels. I can remember in 2012, the real was at 155 to the dollar. So right now, and I think there's a little bit of room for some recovery, assuming that Brazil's economy does sort of start to pick up a bit more later this year. So, it could regain some space even with another smaller interest rate cut, if that's what materializes. But no longer is the carry trade a factor for attracting portfolio flows to Brazil as it was in the past. So in terms of sort of what is then going to, what capital flows can Brazil attract? Well, you have foreign direct investment, and then you have sort of equity investment. And if, sort of lower interest rates would be part of, and inflation would be part of a story of providing a framework for faster growth than in the past. And that helps economies to expand. And that is what attracts the capital through the stock market or, through acquisitions. So that would be sort of the a positive from the lower local policy rates in terms of attracting foreign investment back into Brazil.
Perfect. So Rob, I think we're unfortunately approaching the end of our session, but I guess a final question would be interesting to have your views on. So we've been seeing a lot of the conflict between the US and China increase substantially. And of course, Brazil is kind of, intertwined in that whole conflict, in a sense that if the US and China don't sign a trade agreement or, move back from their trade agreement, we end up having benefits for our own agribusiness, because we also compete with the US in some exports. But at the same time, the instability brought by this in emerging markets is very big. So how do you see that relation considering Brazil?
Sure.
And I guess there's another angle to that question as well, which is, a lot of multinationals are studying, to have different hubs around the world, and change their supply chains so that they don't depend so much on one or two countries. Do you think that could attract, multinationals to look at Latin America and maybe spread out a little bit more their production hubs,
Yeah, no, those are the key questions, and we haven't really sort of looked at foreign trade too much. Clearly, the agro industry complex is, Brazil's a world leader in this area and will continue to be, as it needs to, as you need those foodstuffs to feed the world as the population continues to rise. So, the sort of there are issues around whether demand rises or falls, depending on the fluctuations of the China and US trade war. But I would sort of, not look necessarily at sort of the short-term aspects of that, and just sort of the long-term picture is clearly Brazil is going to be in a strong position as long as, farming is kept sustainable, going back to the environmental issues. And then, some of these short-term issues, of course, what happens if Joe Biden comes to the presidency? I think we'd still see issues around this sort of US-China strategic relationship, sort of power struggle over the next generation. We're still going to see some unease. I don't think we'll go back to where things were before Trump came to power. But I think, we'd see a more constructive global trading relationship. Having said all that, just sort of stepping back, when the government came to power, we had in Brazil, we had Guedes very strongly pushing a trade liberalization agenda, and he's had to dial that down. One angle was going to be sort of reducing imports. I think Brazilian companies are import tariffs. Brazilian companies are in a pretty sort of weak position to do that, and they sort of pushed back. And then there were these efforts to improve trade relations with other countries. I think sort of Brazil came so late to this game, whereas Mexico, Chile, even Colombia, Peru, they were in this game, 20, 30 years ago. So in particular, Mexico sort of has always had this sort of locational advantages, being right on the border. I think they clearly benefited. Had there not been those opportunities, they would have been sort of weaker than they were. They could have benefited more, arguably. Brazil, however, has been cut adrift from these global value chains. Yes, it's doing very well in agro-industry, but it hasn't, very few companies are linked into, for example, global IT chains, which is, one of the fastest growing sectors. So Brazil's coming to the game pretty late, and not at a very opportune time, because, you're seeing sort of regionalization rather than countries sort of opening up. But I think, there are some opportunities. I think we're going to have to see how they play out as some, governments look towards sort of nearshoring. I think Mexico is clearly in a stronger position. But, there are opportunities, I think, for Brazil to get sort of closer to the US and Western economies in the next phase.
Perfect. So Rob, I'm afraid we've reached our time limit. I'm not sure if you have any final questions, Fernando. Otherwise, I can ask Rob to give some closing remarks.
No, I'm good. Just wanted to thank Rob very much for your participation. It was great to listen to your thoughts. Thank you very much.
Yeah. So as well. Thank you so much for joining us, Rob. It was very, very interesting and productive, and I bet our audience really enjoyed it too. I hope you found it interesting as well. So please feel free to have your closing remarks, and the doors of XP will be always open. So please feel free to, when all of this is over, you can come and visit us in our new offices, apparently.
Well, thanks a lot again for inviting me to this platform, and it will be a pleasure to come down to Brazil eventually when we get through this crisis. I mean, just to sum up, we've dealt with a lot of things here. The public finances, that's going to be a key one that investors are going to be looking at. Can Brazil steady the fiscal ship next year? Will there be sort of an automatic improvement in revenue? Will there be a need for tax measures? That'll be pretty difficult to do during a sort of weak economic environment. And then there's the reform agenda. So, investors are going to be looking at, where is it going? What are we going to see this side of the 2022 electoral cycle?
Perfect. We'll be all eyes on that as well. So thank you so much, Rob. So hope to see you soon, speak to you soon.
Yeah, pleasure.
Thank you, Rob. Obrigado a todos que participaram.
Obrigada, gente. Até a próxima.